Hi, hello everyone. This is your JK. Welcome to this special episode. In this video, we are going to see about the trade BTCUSD, which I executed in week before. Currently, BTCUSD is trading at 68,100. Right? I took a trade for 20th February expiry. This is a kind of spread, a credit spread, which I can call twisted call ladder spread strategy. Okay, it is a kind of credit spread strategy. It is similar to call ratio spread, but I twisted slightly, and I converted this into a call ladder spread strategy. Okay. Let us look at the trade. What I did, 71,000 call option, 4 lot buy, 61,000 call option, 8 lot sell, as well as 71,000 call option, 8 lot sell. So I have 2 leg of sell, 1 leg of buy. I executed this trade when market is at 67,000. Yeah, exactly. Executed at current market price. Okay. Yeah, this is the ladder spread. Okay, let us look at the payoff chart. So the payoff chart looks similar to call ratio spread, but one thing slightly different. In call ratio spread, the downside, the profit is pretty much lower than ladder spread, as well as see it's look like some triangle right on upper side payoffs. Whereas in call ratio, the triangle should be very sharp, as well as it should be in very smaller range than this. Okay, that's the number one differentiate reason between call ratio spread and ladder spread. Okay, what are the pros in this trade? Okay, there is no risk on downside. Even if BTCUSD crashes to 30%, 40%, even 100%, it doesn't matter. No problem on downside. You have the profit of $4.96 solidly, excluding tax and the GST. Okay. On upper side, there is a break even. Yeah, of course, in ratio spread, there is a break even on upside always in call ratio spread. As far as in put ratio spread, you have a break even on downside. Okay. Look at this chart. I have break even at 71,413, which means I ended up in loss in this trade only if the market closes above the 71,413 within stipulated period of this expiry time, right? Now February 17, 2026. Okay, still there are three days more for expiry. Okay, from current market price to 71,400 is almost, I think, 6.5 to 7% approximately. If it breaches 71,400, I started to eat the losses, right? So in order to cut the losses, if for example, if BTCUSD breaches the 71,400 on upside, even by tomorrow, I can convert this into a butterfly spread. Okay, at least I can minimize the loss on upper side. Okay, that thing is different. That is advanced level. That are the things I will teach you in future. Okay. Now look at the so what are first look at the pros and cons. First, in terms of pros, we can see there is no risk on downside. You can sleep with peacefully. There is no emotions, greed, fear, hope. There is no kind of emotions which can affect you, which drags you down. Nothing like that. Okay, because there is no risk on downside. Usually, the implied volatility on put side is very high. Because the downside risk is very, 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 very high in whatever the script around the globe. You can see the implied volatility on put side is very high, because anytime market can crash. Even a small negative news drags the market, but there are n number of positive news to pull up the market, right? So that's why the implied volatility on put side is higher than call side. So according to that, there is no problem on downside. Okay, even if it crashes to 69,000, 67,000, 65,000, blah blah blah, there is no problem. Okay, on upper side there is a break even at 71,400. Okay, so let us look at the chart. Let me open trading view. Okay, I opened the BTC USD. I just dragging, zooming in. Okay, my I mark horizontally at my break even 71,400 around. Okay, I marked horizontally. This is my break even. If market closes above 71,400, 413 within February 2026, I eat the losses, right? Unless and until I eat the profit. Okay, currently the market stays at 68,000, right? Now, as I said, downside there is no risk. Even especially in call ratio, kind of call ratio spread, there is no risk on downside. Make sure that it should be a credit spread. If it is a debit ratio spread, you have to face the losses on downside also. Okay, that should be a minor loss. Okay, what are my suggestions? Yeah, my suggestions is first of all, don't do naked buying selling in BTCUSD. Even in trading itself, I am used to say often, don't execute naked buying selling options, because it is it can kill your emotions, it can kill your peace. Totally you're out of that zone, out of that trade zone. Okay. So next we are going to see about that D-Wall. DOL is nothing but it is a volatility index. It shows how much volatility the market be. See here in India we call it as India VIX. Here we have DOL, derivative volatility, which means it shows how much BTC USD volatility is. Here you can see on February 5th, 2026, it shoot up 54%. On February 5th, 2026, BTC, I think BTC crashed drastically, which means crashed around 14%, right? On February 5th. As you all know, volatility index is inversely proportional to respective market. For example, in India, if market shoot up drastically, India started to crash, as well as vice versa. Here also like that. On February 5, 2026, look at the chart. It shoot up 54% BTC volatility index. On that day, BTC USD crashed 13 to 14%, right? That's why it's shoot up like anything. There are the people used to see nowadays, at lower level of volatility index, they execute short straddle, that kind of spread, because the people can get more premium, right? So yeah, that's good. That's nothing wrong in that. You can execute trade like that, but make sure one thing, always do region trades, whatever, either it may be a debit spread or credit spread. Always use region trades. That's the first thing I can recommend you. See, even in this trade, okay, even if it breaches 71,400, okay, no problem. I have some adjustments. I do some firefighting. I can minimize my loss on upper side. Whereas, okay, no problem on downside, as you know. This is what one should trade like. One should trade like a monk. There is one saying, like always trade like a monk. There should not be any emotions while making money, because while making money in whatever the business, while making money, the emotions will come in and always pushing up a number. It is very difficult to make. To handle the emotions, so that always do hedge trades, whether it is debit or credit, so use the trades. Okay, I forgot to say about the cons. Okay, cons nothing but I face losses only if it breaches 71,400, right? If it breaches 71,400, as I said earlier, I have some firefighting and adjustment trades I can do and minimize losses on upper side. So if you want to learn, I will explain on YouTube in future. Unless and until connected with me, I hope you all enjoy this. You enjoy this video. Thank you for watching this video. If you like this content, hit the like button, subscribe, and share to your trading friends. Thank you.